The first atomic bomb was dropped on Hiroshima.
Over humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
You know, twice a year we all pretend that changing the numbers on a clock somehow makes us gain or lose an hour. Daylight savings time shows up, we spring forward, and suddenly everybody's a little groggy, running a little bit late, and wondering why the same commute feels harder than it did just a few days ago. Now, nothing about your actual life changed overnight. Same job, same family, same to-do list, but that tiny shift in time is just enough to throw off your rhythm, or is it just me? Your money works a lot like your body clock. A scary headline hits, markets wobble for a few days, and suddenly it feels like the whole system is off. People who were perfectly comfortable with their plan on Friday wake up on Monday talking about going to cash or dumping long-term investments or waiting until things feel normal again. What's really happened? Well, the fundamentals of their goals haven't changed. Their time horizon hasn't changed. Their need for growth and income hasn't changed. They're just dealing with a short-term mismatch between what they expected and what they're seeing on the screen. Let's call that financial jet lag. Now, sleep experts will tell you the way through a time change is boring consistency. Get up at your usual time, get some morning light, stick to your routine, and your body will adjust. And the same idea applies to your financial life. When things feel off for a few days, that's usually the worst time to rewrite your entire plan. Instead, come back to your basics. You don't need a dramatic reset, no matter what's going on in Iran. You need patience. You need some small course corrections, and you need the discipline to let your financial body clock settle back into its long-term rhythm. After the break, I'm back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
On March 9th, 1959, Barbie debuts. Oh, she's plastic, fantastic. She's got something to say about the stories we tell ourselves. In the spring of 1959, toy buyers at the American International Toy Fair in New York were introduced to a new kind of doll. She wasn't a baby to be fed or rocked. She was an 11.5-inch fashion model with a high ponytail, arched eyebrows, and a black and white striped swimsuit. Her name was Barbie.
Ready for fun?
Now, Ruth Handler, the co-founder of Mattel, had watched her daughter ignore baby dolls and instead play with a paper cutout figure as if it was an adult. Handler saw something, and she saw something the market didn't yet recognize. Kids didn't just want to practice being parents, they wanted to imagine their future selves. All of it.
Hi, Barbie.
Hi, Ken.
At first, Barbie was a gamble. Some executives worried that a doll with an adult figure in a closet full of outfits would be too strange, maybe too grown up, or it might just simply not sell. Parents and critics debated whether she set unrealistic standards. Here's a hint, they still do. But children voted with their allowance money and occasional temper tantrums in the toy aisle. Within a few years, Barbie had gone from a single swimsuit model to a full-blown universe. Careers, cars, houses, friends, siblings, and wardrobes for every occasion. Over the decades, she's been everything from an astronaut to a doctor to a presidential candidate, reshaped and rebranded to fit new eras and new expectations. Along the way, Barbie became more than just molded plastic. She became a mirror for changing ideas about work, identity, and possibility. For investors, Barbie's debut and evolution offer a surprisingly useful lens. A single toy, launched into a skeptical market, grew into a multi-billion-dollar franchise because its creator understood two things: the power of long-term vision and the pull of the stories we tell ourselves. Those same forces are at work in every financial plan and every market cycle, including this one. Here then are 4 lessons for the modern investor from Barbie's first appearance on the shelf. First of all, start with a clear vision, even if others don't see it yet. Ruth Handler didn't have focus groups clamoring for an adult fashion doll. She had an insight into how kids were already playing. Your financial plan works the same way. The most important part, your vision of the life you're building, that won't come from a headline or a hot tip. It comes from a clear sense of your own goals. What you want from work, family, and retirement. Markets will always offer these new toys, but a strong vision is what lets you decide which ones actually belong in your toy box. Second, adapt the packaging, but protect the core. Barbie has changed clothes, careers, and even body types over the decades. The packaging, branding, and accessories continue to evolve. The core idea, open-ended, aspirational play, has stayed remarkably consistent. Good investing is similar. You'll adjust how you invest over time, shifting between accounts, updating tax strategies, hopefully, and rebalancing among sectors. But the core disciplines, saving regularly, staying diversified, matching your risk to your time horizon, those are what make the whole thing work. So don't confuse a wardrobe change with a reinvention of who you are or what you're trying to accomplish. Third, beware the stories that don't fit you. One critique of Barbie is that she can project, shall we say, a narrow story about success. A specific look, lifestyle, or definition of having it all. Markets do a similar thing. They constantly broadcast narratives about what successful investing should look like. Always beating the index, swinging for the fences, finding the next big winner. Yeah, those stories can be fun, but they're not always healthy and they're not always realistic. The real measure is whether your financial choices fit your life, not somebody else's highlight reel. It's okay if your version of success looks more like a well-funded 529 plan and a paid-off mortgage than a Malibu dream house or Ken's sporty convertible. Finally, compounding is a franchise. It's not a fad.
Barbie and Ken.
Barbie was a lot of things. She still is. But she was not an overnight fad. She was the start of a franchise that compounded on itself. Toys, clothes, movies, nostalgia, and eventually multi-generational brand loyalty and silver screen stardom. Your wealth building works the same way. The big wins rarely come from a single perfect investment. They come from years of consistent contributions, reinvested dividends, and patient time in the market. Doesn't always feel dramatic in the moment, but like a toy line quietly expanding year after year, it can look astonishing when you look back and zoom out over a couple of decades. Here's my final thought this week. When Barbie debuted in 1959, no one knew that she would still be in the toy aisles and movie theaters more than 60 years later. What started as a slightly controversial doll became a long-running, evolving project of the imagination. Your financial life is a similar long-running project. You will update the look of your plan as seasons change. Different jobs, homes, more kids, causes, and interests. But the goal remains the same, and that's to give your future self real options, not just ones that look good on paper.
You're 10.
But it's Barbie and Ken. There is no just Ken.